Interest rates are up, house prices are down, and the media is running around like a chicken with its head cut off. You're probably wondering, is now the time to be considering an investment property? That's our topic for today, so if you're interested, then keep on watching. Before we get started, I'm Stephanie Nause with the Homeplicity Realty Group here at Keller Williams, and I'm passionate about helping our clients build and develop wealth through real estate. So if you're interested in tips on buying a home, selling a home, or investing in Toronto real estate, then I hope you'll consider subscribing to our channel. If you like this kind of video, go ahead and give it a thumbs up. And if you're considering buying an investment property in 2022 or 2023, go ahead and comment down below because we'd love to hear from you. Let's get into the topic. Is now the time? I'm going to go ahead and say yes, and for the following reasons. The first one is this isn't a market bubble that's going to burst, and monthly rents are actually way up. So the demand for rentals and those prices are up significantly. Home prices have adjusted down, which means there's less competition because of the interest rate hikes. Interest rates are actually still at historical lows, and real estate should be a long-term investment anyway. Let's talk a little bit about the bubble because that's what everyone kind of seems to be circling around right now. It's important to understand that we're moving more towards a balanced market versus an actual market crash or a bubble. What I mean by that is there's a lot of sellers who are mentally attached to those crazy prices that we saw, like that major increase we saw at the first quarter of 2022. That's the amount that's kind of slid back right now. That's where the retraction has been. Those sellers that aren't getting those numbers, they're just pulling their properties off the market. They're not selling them for the fire sale prices that a lot of buyers are hoping for. And the people that would have put their properties on the market because their neighbor sold for an astronomical price, those people also are not going to be putting their properties on the market. We're not going to see that surplus or that massive jump in supply that would trigger a real estate market bubble. And then at the same time, these people that aren't selling their properties, because our Canadian lending rules are highly regulated, they're going to qualify to renew their mortgage at the higher interest rate. They're just going to have a little bit less disposable income. So we're not going to see those giant increases in supply. If we're talking about whether or not it makes sense to be buying a rental property, I think we first need to talk about what makes a good investment property. And the first thing to keep in mind is that there's really two ways to earn money on your rental. So the first one is monthly cash flow, so having your rents be in the positive, and then the second is the equity buildup. So the longer you own the property, the higher the price will go up. And there are also some other advantages to owning an income property. The first one is tax write-off. So you can write off your mortgage interest, you can write off your property tax, you can write off any of the repairs that you do to the property, professional services like mine when landlords hire me to find them a tenant. And then if you actually have negative cash flow, so the rent that you're charging is less than your overall carrying costs, then you can actually write that amount off against any of your other taxable income. And then the other thing to keep in mind is that you're building equity on the property while the tenant's paying your mortgage down. So that's another really nice thing. You put the down payment and the tenant pays the mortgage, they pay the interest, they pay all that stuff. I think something to keep in mind moving forward if you are going to be shopping for an investment property is that it's at least cash flow neutral or cash flow positive. Over the last few years, we've seen so many landlords just buying properties to get into the market with those expectations of 15, 20, 30% price appreciation over time. And I don't think that we're going to see that moving forward. I mean, we've already seen some price retraction, so you definitely want to make sure that you're being more cautious and looking at the financials for the property. The other thing to consider is that rents are increasing. So your mortgage payment is fixed, but the amount of rent that you can charge every single year should be going up. That's excellent. And the year over year rents are actually up by about 15% so far this year, which is a huge number. We saw a really big drop during the pandemic, but we've since caught up and then passed that now. And with less people qualifying for mortgages because of the interest rate hikes, that's taking some of those buyers out of the market and they're gonna be renting. I don't see that the rent increases, like the increase in the monthly rent slowing down just for that reason. And then the other thing that's amazing is that there's so much less competition now. It was really hard to buy an income property and have the numbers work for the last few years because there's been 26 buyers competing for one property. There's always someone that's, has subjective value and is going to just blow the offers out of the water because they really want to be in there. So now that we're seeing less of that, less buyers, less competition, none of those multiple offers, well, fewer multiple offers, you're in a position to be able to source and find those good deals for those people that do need to sell and negotiate and hopefully find something where the numbers work. Mortgage rates are still historically low. I know everyone's really up in arms about the rate increases, but if we look back to 2010, where the interest rates were about 5%, we're basically back to that level right now. So we've seen interest rates go up by 2.25% since January of 2022, likely because of where inflation's at. We will continue to see those numbers increase. September 7th, there's speculation that there'll be another rate increase, and more than likely that will happen. And even if it does, if we take a look at 2007, when I started selling real estate, interest rates were around 7%. And in the mid 90s, they were between 8 and 9%. This is a situation where you might look back in a couple of years and be really grateful that you bought something now. It might look like it was a really good decision if rates continue to increase. So just something to be mindful of. If we look at the past real estate market, especially over the last 5 to 10 years, it was really hard for investors to be buying properties because home prices were increasing. Basically every property sold for a little bit more. There was lots of competition, but those investors are in such a good position right now. They were able, the rents are increasing and they were able to lock in that low interest rate. So even though they had to pay more than they initially wanted to, they're really benefiting now. So will that happen moving forward? I don't know. We'll have to see. I mean, that's all well and great for them, but what about now? What about 2022? Economic predictions for the long-term real estate market are positive. There's a saying in our industry, don't wait to buy real estate and wait. Meaning that this softening of the market could actually be a really good opportunity and the advantage that a lot of investors were looking for. Seems like it could be an opportunity for me. Just to recap, if we take a look, adjusted home prices, relatively low interest rates remaining, soaring rental rates, and don't forget the diminished competition, seems like it could be a good opportunity for me. What do you think? Go ahead and comment down below. If you like this kind of content and you enjoyed the video, go ahead and give it a thumbs up. And if you are interested in a list of rental investment opportunities, go ahead and DM me. I'm happy to send that over to you. Until next time, bye.